good morning and happy Thursday. Welcome to today's episode of Morning Well. Start of a new quarter, the fourth quarter of 2020. Wishing you the very best. Three things that we will talk about today would be no stimulus deal yet, Q3, a quick roundup, and dollar sold off despite good data. Steven Mnuchin said he and Nancy Pelosi made a lot of progress in a lot of areas, and the House Speaker said talks with the Treasury Secretary will continue. But Mitch McConnell was pessimistic, saying that the two sides remain far apart on the amount of spending. House Democrats postponed a vote on their 2.2 trillion proposal until Thursday to give negotiations one more day, is what is being reported. Wall Street rose on the final trading day of September as investors remain focused on prospects of another stimulus package to support the US economic recovery from the pandemic. The sentiment was also driven by upbeat economic data. The US economy contracted less than initially projected in Q2, and private businesses adding more jobs than expected in September. The Treasury yields were also higher. The 10-year yields went up to about 0.68. Dollar was mostly lower against the G10 peers, though the euro underperformed. Gold retreated. Asian equity futures are in the green. US stocks turned in a second consecutive quarter of dramatic gains, continuing a historic recovery that few would have predicted from the depths of the March downturn. The S&P 500 and the Nasdaq hit a string of records in the third quarter, a journey that has confounded many investors with the sheer velocity and the strength of this pullback. Despite a stretch of volatility that dampened the momentum in September, the Dow and the S&P on an average gained about 8.5% to 7.5% respectively over the past 3 months. The advances built on even bigger gains in the previous period, capping the two best quarter performance since 2009. Both indexes were up more than 26% since the end of March. The Nasdaq, on the other hand, surged 11% in the third quarter and rose 45% over the past 6 months. That's the biggest two-quarter gain since 2000. Many investors attribute the broad stock market's performance to an economy that has steadily improved, though it remains far from where it was at the start of the year. But the bounce back in the initial stages of the Q3 was strong, and that actually fueled better sentiment. Consumer spending has also ticked up from the low levels that we saw earlier in the year. Hiring in the US has picked up for 4 consecutive months. Meanwhile, the Federal Reserve approved a shift to how it sets interest rates in the third quarter, signaling it could leave them low for years. 2023 or 2024 is the earliest that the market is kind of looking at for a rate increase. So all of this have added to this sentiment. Among the big winners in the third quarter have been shares of home builders, which have benefited from an epic housing boom as the pandemic has created historic shortage of homes for sale. Americans have been rushing to land more living space, anticipating they'll continue working from home during the pandemic. Shares of Dr. Horton, Lennar, all of them have rallied more than 30%. New home advanced about 62%. So that was a quick roundup of the Q3 US equity market. I think it's been a stellar quarter by any measure. But one thing to note is a lot of that economic recovery, the V-shaped kind of recovery that we saw from the bottom is kind of tapering off. So, many call it stall speed. So we are hitting stall speed in terms of the numbers, in various numbers that you can look at to measure the economic performance. Lastly, on the FX, the dollar sold off against most of the major currencies despite strong US data. Non-farm payrolls are scheduled for release on Friday, and according to ADP, US companies added about 742k jobs in the month of September. Second quarter GDP was revised slightly higher, and pending home sales rose 8.8%, over 2 times more than expected. While the ADP is encouraging, it's hard to trust this report is indicative of the broader economy or where the labor market is headed when Disney, Shell, Dow, Continental and Marathon Petroleum announced plans to cut thousands of jobs. Nevertheless, better than expected US data and positive stimulus package headline drove equities and treasury yields sharply higher. Generally, you would expect that the dollar also to kind of climb when the yields go up, but that didn't happen yesterday, so it sold off against most of the major currencies. That's the update. Stay safe and healthy, everyone. Have a lovely day, have a lovely month, have a lovely quarter, and hope you end the year strong.